The next company ticker symbol is C-O-R-T. Mo, do you know what this company?
CORT.
Yeah, what is CORT?
Are they the ones that do the furniture? Oh, different one. Forget
Therapeutics.
it. Corcept Therapeutics.
Yeah, I've heard of them. I don't necessarily know what they do.
Engaged in the discovery, development, and commercialization of drugs for the treatment of severe metabolic, psychiatric, and oncologic disorders by... Wait, oncologic? Really? Involving psychiatric as well? Ironically, my mother's a psychiatrist, my dad's an oncologist.
This is all over the place.
Yeah, this is all over the place. Okay, ready?
Go ahead, Paul. This is...
The story of
CORT.
a girl.
Go ahead.
$3.5 billion market cap. PE of 33. So it's an X on the PE to start. We want less than 20. It doesn't tell the whole story. Profit margin. 109 million in profit on 356 in revenue, which is about 25%.
Good revenue then.
So very good check mark there. We have an X on the PE, check mark, no dividend there. So we're 1-1 right now.
Revenue growth over the past 5 years is pillar number 3, Paul.
The revenue growth, shockingly, has been huge. 50 to 306. So guys, when you do your analysis on this is already showing a lot of growth. You want to sit there and realize, okay, is this company going to grow a ton more? When you do more research on them, figuring out what's in the pipeline and what's going on will be very huge. This is only through 2019. Let's look at the last 12 months to see how they've done in the last 12 months. So their revenue, they only went up by $50 million in the last in the year between. So it's not great. It's not as good as it was before, but it's fine. Net income. Oh my God, these guys make money. $6.4 million loss, $94 million gain, check mark there, and pretty consistent. I like the fact that they're growing. They went from losing tons of money to gaining to making money.
A profit growth, that was up. That's a check for profit growth.
Yep.
Shares outstanding is pillar number 5, Paul. We want this going down.
107 to 114, X. Another thing, look back here at 2010, they had 68 million. So they've doubled their shares in the last 10 years, which means if you owned a share 10 years ago, that same share only gives you half the number you did before on the amount of revenue, profit, and all that stuff that it did before. So that's not a good thing. I don't like that very much at all. So that's an X.
I'm trying this new drop, Paul.
Okay, so that sounds
Drop.
y'all want to play.
But I think it's too long and drawn out. I can't squeeze it in with you going crazy. All right. So shares are way up. That's an X.
That's
Current
what she
assets over current liabilities is pillar number 6, Paul.
465. Guys, this is insane. Look at this. They only have 44 million in total debt. So it's a $420 million plus. So on their market cap, what was their market cap?
The market cap is 3.5 bill.
So it's basically, let's call it a $3 billion company now. Because when you have total cash on hand being greater than total liabilities, you subtract that extra amount from the total market cap of the company. Because if you bought a company, let's say for example, for $10, it had $5 in the bank and all debt was $2, you could shut it down and still get $3 out of your money back. So you're really only paying $7 for the company. So here, you're going from 3.5 to essentially $3 billion. That's pretty awesome.
Let's keep going, Paul.
Free cash flow.
Free cash flow.
Holy cow. This is the lowest amount of capital expenditures I've ever seen. Look at this. 5 years ago, they spent $17,000 on capital expenditures. Last year, $1 million. So 3 million to 135 million. Is that growth, Seth?
3 million to 135. Yeah, I would say they're doing
Call
well.
it 18, 60, 115.
Divided by 5, the free cash flow growth is 66.
Yeah, I'm not going to even look at that. I'm going to look at the last 2 years. Here's why.
Go on.
The growth was so big in the last few years. Let's go to the last 12 months. I mean, look at that, $165 million free cash flow number. So basically, let's call it 130 times 20 equals $2.6 billion. So it's technically an X on the free cash flow multiple, but this is an example where I think the multiple needs to be higher than 20. This is a fast-growing company with a lot of potential. If this company has a lot in the pipeline and doing a lot of great stuff, they're going to crush these numbers. They're going to absolutely crush these numbers. Now, the growth has slowed in the last year, but that's why you need to do more research to see, is there more that can happen that can drive that revenue number up even higher?
A lot of these, they're really all over the map. They go from endocrine to metabolic to oncology to neurology to addiction, ophthalmology. So I'm going to say psychiatry, ophthalmology, addiction, neurology, probably not going to make them that much money. Cancer, maybe. They're in pancreatic cancer, ovarian cancer. They're starting to get into breast cancer. So if it's me, I want to see where they're making the most of their money from, because I'm going to assume that it's the oncology department. and probably maybe this metabolic department. I mean, they're talking about Cushing's syndrome. It's not that common. And then we have non-alcoholic, yeah, I don't know. I would want to see where they're making most of their money. That's my big thing. But let's go to the momentum of it. So right now, they're definitely going into a downtrend, started it yesterday. We are just starting to trickle into that sweet spot. And again, it's been one of those incredible runs up, gone sideways for a long time. So let's see if we can get some negative volume on this thing to start coming down. If it's me, I'm throwing one tracker share on there, keeping a watch on it, and that's how I'm gonna play this one.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.